Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Monday. Welcome, everybody, to the Monday morning edition of the Daily Market Commentary. It is the 12th of November. Hope everybody had an absolutely amazing weekend as we are about to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakout trades and turning points from an educational perspective. If you're not a subscriber, do me a favor, click that subscribe link down below. If you are a subscriber, do me a favor, leave a comment, leave a like, or tell somebody else about the channel so they become a subscriber. Let's dive right in. S&P 500 down 2 points this morning as we had a little bit of sell-off right around the European market open. Now, we were trading higher from our initial open. We opened yesterday at about here, and we traded up in the first few hours, but then around the midnight hour, we started a pretty big sell-off, and we've sold off about 12 points since that high. So the momentum would tell me that we would probably continue to carry it a bit lower. Now, we had a little bit of a reversal off of Friday's daily market commentary level down in here. We took that same exact level. Level's not dead, still very valid, but switch it to a confirmation style entry at this point. Simply because we have a touch and it makes it a lower probability. Now remember, that was found on a 15-minute chart because it's in purple, so it's always going to be a slightly lower probability when you're at a smaller time frame. So take a look to the European market open to see if there's a potential reversal up there for price kind of coming back down, and see if that is a chance that you'd be willing to get in. Overall, on our big picture perspective for the week, we're technically still in an upward trend, but that upward momentum is surely weakening, right? We're starting to see that momentum really fall off, and that momentum, that started to fall off. Though I still technically have higher swing highs in momentum and higher swing highs in price, I am getting a little bit more hairy, if you will, on that upward move. So looking towards the NASDAQ, so in the NASDAQ, we've got an area up here where we have a fair amount of basing. If price comes back up in here, that was a decent little reversal point. Didn't quite make it there in the overnight hours. I still think there's a chance that this one could sell off. Now the NASDAQ is actually up a little bit, while the S&P is slightly down. So basically they're fairly flat. But the NASDAQ is slightly outperforming the S&P this morning. So I wouldn't look for as much of a short trade out of the NASDAQ as I would out of the S&P. If you are more aggressive, some of you that are a more aggressive style, you can take a breakdown from basically where price is right now, right? I mean, we had this move up. We've hit it and we've chopped around in it. I wouldn't be opposed to a breakdown from where we are here. I think that there could be a chance that we could move a bit lower. I wouldn't do that in the NASDAQ because the NASDAQ is still trading a bit higher than all of those levels. And so the S&P might be the better one for that opportunity. In crude oil, so crude oil, we gapped up, traded up a little bit, and now have started to sell off of that trade up. Our big picture is still fairly bearish in crude, and there's going to be some reversal opportunities up above. There's definitely one way the heck up here. I just don't see us making it up there anytime soon. But this downward move is greatly overextended, right? Now, if you are a trend channel kind of person, in your trading, if trading in a trend is part of your repertoire, we are definitely, having an extended downward trend. You'd anticipate a little bit of a pop higher before the next move down. And that's really where the gap on Sunday night didn't surprise me. What did surprise me is how quickly that gap has been faded, right? We've already started to turn around on that gap. I anticipated a little bit of a run higher on that gap. But we've started the reversal already, and that could continue seemingly throughout the day. So if you are in a longer term oil long, you just want to make sure that you've got some sort of protection around it, and you understand, okay, maybe I can take a short to kind of a hedge against it. In gold, so gold, we've had a really big sell-off over the last couple of days. We are coming to the origins of our last really strong move up. So keep an eye on that area there in gold. I think that if we get a little bit of a pop higher for a potential reversal, then we could pop higher up into this range. I think you could see a decent reversal. My only problem with this area is that it's kind of a retest of this area here to the left, and so your better opportunity is way up here. But getting up there is going to be difficult. So this could be a good candle-to-candle trading style opportunity where your entry would be on lower than this candle right here's low. So right now I'd be okay if somebody takes a short and then your stop is just above this pivot, and then you just move it on a candle-to-candle style from this point. Looking at bonds and our currency markets. So in our bond arena, we have a little bit of a breakout above this area right here. Now this breakout that we've hit has come into a little bit of resistance with all this noise up here. So in our live trading yesterday, we did a lesson on the proper way to trade breakouts, and this was one of the examples that we used, talking about how we'd hit the level a few times. Eventually, it broke out. However, it wasn't a great opportunity because of all this noise up here to the left. Right? You need clear room to roam, which is why we broke out, and then you see 2 candles in a row with selling pressure, right? That selling pressure. Now, once that selling pressure is eaten through, there's a good chance it'll continue to run. And so what I'm going to do is I'm going to add this level. This is not a great time of day, but I'm going to add this little level here, even though it's not a great time of day, as a confirmation style entry, because I think we could get a little reversal there if we do get a decent little pullback. Next, the Aussie. So in the Aussie, we've got a breakout long somewhere up in here. I had spoken about the possibilities of a short breakout right at this area here, especially the fact that we're basing just a bit above it. For now, what I'm going to do is I'm going to add some lines right here if we get a bit of a rally up into this region right there for a potential reversal trade. In the euro, our euro level still way up here. We had a strong sell-off in the euro, gapped down, got a little bit of a fade, and then it just, as soon as the Australian markets open, we had a big sell-off. And so now, are we going to get a little bit of a rally to kind of kick it back up to here for another reversal would be the question, because we've got a little bit of support down here at 1253. That support comes from way back here on the daily chart, this area right there, which is, a couple of weeks ago where we said that eventually we think that the euro could get into to that territory. Canadian dollar, not a whole lot to add on the Canadian. It's also selling off in that downward pressure as we see the overall strength in the dollar. I have a lot of people ask about why I don't use the dollar index. I don't really necessarily need to use the dollar index if everything that I'm trading is against the dollar. Right? I'm essentially looking at the dollar index when I look at each of the individual components that make up that dollar index. And so if each of those individual components that make up the dollar index is going down, then that would tell me without a shadow of a doubt that the US dollar is going up. Now, if they're all coming to some demand at the same time, then my US dollar index is probably going to be coming to some supply. So I look at each individual component of the index rather than looking at the index itself. Okay? All right, so in the Great British Pound, we are looking at the gap down. The origin of the move down was this gap here. Overnight last night, I was hoping we'd get a little rally up here to fade that gap. I'm going to leave this area in play because I don't think it's going anywhere. I also don't think we're going to make it to that level anytime soon, but we will keep it certainly in play. Same thing with our Japanese yen level. Both of those levels do remain very much in play. I want to take a look at this HG, though, and add this HG to my watch list because of the lower swing highs that we've put in right here. Now, this doesn't always break out to the downside, right? That doesn't always break out to the downside, but this would be a better downside reversal opportunity as we stand right now. If we do come down, especially if I get a little bit of basing and another little bounce out of there and it stays in there, Tommy like wingy. All right, everybody. So that's what I'm looking at for today. If you've got any questions, please send us an email. Support@tradersarmy.com. Until tomorrow, everybody, I hope you guys have an absolutely amazing trading day.